All right, welcome back to Market Daily Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for tuning in. If you stayed with us all day, it's been worth it, I think. Let's jump right in and see what these corn prices are doing. Look at this. We got a 35-cent limit up move in May, 7.25 3/4 is last. We've got a 27.5-cent higher July board at 7.04.5. And look at D's corn, new crop, 6.21 3/4. That's up 14.5 cents. Let's see what we've got going on in soybeans. Soybeans are up 47 cents in that May contract, 16.83 3/4. July's up 40.25 cents to 16.56 3/4. But we'd be remiss without looking at the new crop, Novi 22 soybeans. What's that doing right now? That's up 2.49%. That's 35 3/4 cents higher. That's 14.71.5 on its way to 15. Chicago wheat, what's happening there? Let's take a look at that market. That market's been on fire, as they say, on fuego and fuego. May is up 50 cents. That's the limit. 9.84 even as last. July up the limit 50 cents at 9.67. There has been some trade in the limit up hard red wheat in Kansas City, where we're going to next. Look at this. We've got May at 10.03 even last. That's up 50 cents the limit. We've got reports of that being about 10.15-ish, 12 cents higher. So we'll keep you up to date on what we hear. But again, that market still continues to carry on higher synthetically through the options pit, higher than that 10.03. It's 10 to 15 cents better still. We've got July up the limit too at 9.90 3/4, and actually Sep and Dees also up the limit. How about spring wheat in Minneapolis? May is up 55 1/4 cents to 10.49 1/4. July up 54 1/4 cents to 10.41. All right, quickly. Cotton, take a look at that real quick. 358 points higher in that May contract. The 122.70, though, that's on fire as well. Let's bring in Ted Seifried from Zaner Ag Hedge. He's in Chicago. All right, Ted. I mean, let's try to get through this without saying Russia and Ukraine. Not possible. Not possible. What are your thoughts? I mean, there's so much out there. The floor is yours.
Yeah, look, we are sharply higher once again today. Although it'd be nice to see that July corn contract close limit up so we can get some limits tomorrow. But it just doesn't want to do that. Either way, it's a tremendous amount of strength on the board that we've seen so far this week. The big news today was that the UK is banning any Russian ships from coming into port, and that the EU is sounding like they're going to follow suit here shortly. So that means even if the Russians were able to get wheat or anything out of their ports and get them to get them to Europe or wherever, they're just not going to be accepting them. So, this just continues to snowball. You wonder at some point if we just are going too far too quickly, and that maybe we could have a downdraft a la last Friday. But overall, I mean, you already had bullish grain fundamentals, and now you're dumping a whole bunch of gasoline on top of that. It doesn't feel like this is going to end anytime soon. So there's just still more upside potential. I do want to say, what's getting lost in the mix here is the conversation, the second season safrinate corn crop conversation, what's happening with weather down in South America. But again, you don't have a whole lot of bearish aspects of that either. Something I'm going to be listening to tonight in the State of the Union address is renewable fuels, to try to get any sort of hint on what this Biden EPA might do. But really, we're chasing headlines, Scott. As you said, Russia, Ukraine, that's really all the market cares about at this very moment in time.
Right. All right. Stay right there. That was good stuff. We're going to go away, pay some bills, and come back and talk livestock with Ted Seifried. He's with Zaner Ag Hedge. We'll be right back. All right. Welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Let's use that as a cheap segue into these cattle markets. Let's look at live cattle real quick. That'll be the first one we bring up. A little bit of spreading going on here. April's off 97 cents to 104.45. That's on the lows. Got June off 75 cents to 136.95, just off the lows. But as you go back out the deferreds where the buying takes place, we've got an October and December board that are between, say, 35 and 12, 15 cents higher. So that's mixed, but some spreading going on live cattle. That's pretty much the picture there. How about feeders? They have to fight through a higher corn board. They've done pretty well, if you ask me. April's only off $2.07 to 159.92. That's about 80 cents off the lows. May's off $2.52, 165/27. All right, so that's the feeder story. And lean hogs, they were good. They were strong today. Look at this. April up $2.75 to 106.25. that's 50 cents off the highs, and May's up 111.42. Or no, May's up to 111.42. That's a $3.77 gain. All right, let's bring back in Ted Seifried from Zaner Ag Hedge. Ted, thanks for sticking around. Anything out there that tickles your fancy when it comes to livestock?
Yeah, Scott, days like today, I kind of consider calling myself Ted the Hog Guy because yay, lean hogs. Hogs had to break off the highs because of some speculative consolidation. Profit taking is what we're going to call that. We came down right to our 20-day moving average, held it, and now we bounced off of it pretty smartly. That chart still looks really very good to me, and I think you're speculating the same way. As far as cattle is concerned, we're kind of struggling to hold our key support here. Part of that is you look at feeder cattle down, obviously because the corn is sharply higher. Feeders did try to stage a little bit of a rally earlier in the day, weren't able to do that, but are not really rocketing to new lows either. But it's been a pretty precipitous sell-off off of where we were just a couple of weeks ago. And then cattle are just kind of stuck in the middle. Domestic demand is perceived to be good, but we're a little bit worried about what could happen if the stock market continues to be under pressure. We've got weights averaging about 20 pounds higher than the 5-year average. So we do have a fair amount up front. But overall, I don't think we're terribly worried about the economy falling apart. So I feel like cattle have kind of found a range that shape sideways in for a little bit of time. But in the meantime, look at the hogs. That's a really nice day, a nice answer to the question of, was this a correction or is this going to be a deeper correction? Well, that's a very nice bounce off of support in the hogs, and it looks good to me. So I think there's a good chance we're going to at least go back up and test those highs in hogs.
Perfect timing. They just told me to wrap in the air. Great stuff. Great content. Ted Seifried, Zaner Ag Hedge. He's in Chicago. Thank you very much. We're going to bring it back to Nashville so I can throw this back over to Suzanne.